folks, what's up? It's Eric from Option Edge, and right now we're about to dive deep into earnings. Tesla announces earnings this week. Same with Microsoft, a couple other big companies as well. Amex. I'm going to dive deep into some Likefolio data, and we're going to make some earnings predictions based on that data, and hopefully we can make some money. If that interests you, let's watch. All right, folks, here is this week's earnings sheet provided to us by Likefolio. In my other videos, I've gone over what Likefolio does. Basically, they take social media data. For example, think of Twitter. They look at tweets about companies, let's say Apple. People are saying, hey, I want to buy the new iPhone. That would be registered as demand growth. If someone says, I love my new iPhone on Twitter, that would be registered as happiness growth. And they sort of make a earnings prediction based on those different data that they're compiling from social media, and they give a proprietary earnings score. You'll notice here's the different companies announcing earnings. You'll see a couple double arrows. That means that they're pretty bullish. Double arrow facing down there would be bearish. Then a star means that the data they've been right in the past many times, so the data has been pretty well on. And then, of course, this is their earnings score, which is just a proprietary metric where they rank basically how strongly they feel about the earnings. So, for example, Progressive Insurance has a negative 49 earnings score, so that's very bearish. The only one that has a bigger magnitude would be the Levi Jeans. Maybe let's see what else we got here. JetBlue, negative 43. And then we have Amex, which also is negative 45. With the star, which means that the mentions data from before has been very predictive. So that's a good trade maybe to take, a bearish trade if you can think of one. And then we have, this is all the different companies announcing earnings this week. So a lot of different companies, ADP, Microsoft, Progressive, those are some big names, Levi, Tractor Supply, airlines are announcing. And of course, Tesla, which is what I wanted to focus on today mostly. But if you look, Tesla doesn't have the strongest earnings score. In terms of being super bullish or super bearish, it is slightly bullish. And here is their written notes. So they're saying that the purchase intent for Tesla is up 11% year over year, which is modest, but nonetheless it is up. And they note that gasoline prices, the fact that they've been falling, is making demand for EV vehicles somewhat lesser. And of course, the long-term opportunity for Tesla still remains very strong, but we're also fighting the headwinds of a hawkish Fed. So they're not very, very bullish on this stock. Let's head over into the trading platform and some charts, and we'll see how we can break down this trade for Tesla. All right, folks, this is the Tesla chart. All right, here's the Tesla chart. I'm looking at it in Pattern Finder, which is a AI charting software. Draws the lines, resistance, and different inflection points for you. Makes it very easy to visually see what's going on with a particular stock. So what is going on with Tesla stock? Well, we're in a downward channel. So we came off like basically $100, and since then we've rallied like 30+% over the last week or two. And this is the 18-month. Let's take a look at the 3-year chart weekly. Again, so we're in this downtrend channel, and for us to reclaim above here, that's about like the 100, 180-ish, 170. Basically, there's a lot of overhead resistance. And if we look at the scatter plot here, the scatter plot has a nice visualization of the different moving averages. So right now, we're at $133 and change. We're above the 10-day exponential, above the 21-day exponential moving average, below the 50, and below the 200-day moving average. So like I said, a lot of overhead resistance for this stock. So yeah, that's all I want to show with the chart. So let's go to the platform and see a couple different ways of how to play this thing. All right, so we're in my Tastyworks platform here. So here's the options chain for Tesla. We have all the different weeks here. You can see on the side the different implied volatilities associated with each expiration date. So obviously we have earnings on the 24th, 25th, whatever Wednesday falls on. I think it's the 24th, or excuse me, 25th. And so you can see that it happens to be that on the earnings date, the implied volatility is higher because we have that binary earnings event. So the question is, what expiration do you want to choose? I've been recently doing the weekly, the week of earnings. I've been trading that week, but you could go out to the next monthly expiration, which is February 17th. So here, let's open up to the January 27th options chain. You can see the expected move is highlighted in this orange here, this orange bar. So the expected move is going to be plus or minus almost $12.50. We're currently at $133. So it makes sense that the expected move would be around 121 to the downside and then around 146 to the upside. So one way to go about this is the conservative way, which is what I actually like to do even when there's a very bullish or bearish Likefolio earnings score. I usually like to play these things super conservative, low risk, because quite frankly, I just hate to lose money on these trades, and I have lost plenty of times betting on Likefolio. So it's definitely not perfect whatsoever, the Likefolio stuff. But if I place a trade beyond the expected move, if I just sold a couple strike wide put spreads, so this is only 3 strikes wide, we'd get a credit of $56, which is actually pretty juicy if you ask me. So we're risking $250 to make like $50, or $244 to make a little bit over $50, with a probably a profit of 83%. P50 77. That's interesting. That's actually lower. I would be comfortable with taking this risk on. If you wanted to, you could maybe turn this into an iron condor for the weekly, just because the earnings score isn't super strong for this week. You could bracket the expected move with an iron condor and collect a credit of $1.10, $1.11, and then your max loss is going to be only $189. And this actually might be the way to play it, because like I said, we have all that overhead resistance. So those are just a couple different ways of how to play Tesla earnings. And as always, none of this is for financial advice. It's only for learning purposes only. I'm going to release other ideas for the other stocks that were shown on the Likefolio data set, and I'll make maybe some short reels and just go over how I'm going to play those earnings going into this week. Okay, so that's what I got. Hope you enjoyed this video. Like and subscribe, guys. Peace out.